All right, as of today, I'm pretty much convinced we've started the bounce that I've been expecting. In several of my last videos, I kept saying that the metals were due for a bounce. The daily cycle was mature. We needed to have another bounce, and intermediate cycle declines usually unfold at least as a three-wave pattern. So um, I believe this was the A wave down. I think we're getting the B wave bounce now. This bounce, it keeps people holding that were, that bought late, that bought up here. They got caught. They're hoping that um, price is going to recover and they'll get back in the green. Um, People that have gotten um, trained to think that the metals only go up during this powerful rally. They want to buy any dip, and so they tend to buy a little bit too early during an intermediate decline. They buy the first dip, and usually that's too early. Um, More than likely, this rally out of this second daily cycle low is probably not going to be able to push above this top right here. If it does, I think it probably will just be a marginal break above that, and then we'll start back down again. Um, we're we're 20 weeks into this intermediate cycle. It's too late to be getting extremely bullish on the metals. The time you need to be bullish was down here when we were bullish, but most people's emotions don't allow them to think like that. We'd had about 8 weeks of choppy going down, so people became very bearish. They were incapable of anticipating a rally and becoming bullish down here where they needed to be. Up here at the top after a 3-4 month rally, now they're ready to be bullish. Now they're ready to buy any dip, and now it's probably too late. Um, so you can see, and let me widen this chart out just a little more. There's just a lot of white space between price here and the 200-day moving average. So this can be corrected in one of two ways. We can either get a correction that comes back down and either tags this or at least gets close to it, and then that will turn everybody bearish again, just like they were back here. That's the fuel for the next leg up. I tend to think that's probably the most likely scenario, but there is another scenario that can accomplish the same thing. Price can chop sideways for an extended period of time and allow this moving average time to catch up. And if that's the case, if we kind of extrapolate this price, let me see if I can draw this in. All right, so if we kind of assume that this trajectory is going to increase at more or less the same speed that it's going now, it could be towards the end of the year before a price is going to chop sideways long enough to allow this moving average to catch up. So that's another possibility. Instead of just a hard corrective move back down towards this moving average, price may just get into a difficult trading range and just chop sideways and allow the moving average some time to catch up. But I don't think you want to get excessively bullish right here, expecting another big push higher. We're just price is too far above the moving averages. We're due for a regression event to close some of this gap, either with a correction downward or a sideways move to allow the moving averages some time to catch up. And if I convert this to the weekly chart, this is the 200-week moving average. a similar, actually maybe even a more extreme picture here. Just prices just stretched way too far above this long-term moving average, and the moving average is just now starting to turn up. If we were toward the end of a secular bull market and the moving average was moving rapidly and aggressively higher as it was here, then I would say, maybe we could stretch much further above the long-term mean, but we're we are just now starting the second phase of this secular bull market. Here was the bear market bottom. Here was the baby bull. We After the baby bull, we recovered the 200. After the baby bull, we dropped into this frustrating 3-year uh, sideways basing pattern, and then we set up with this cup and handle pattern. We set up the beginning of the second phase of the bull market, and these can last many years. Um, the stock market has been in the second phase of its bull market for about 9 years, and gold is just starting the second phase of its bull market. So it should have many years yet to run, and during that period, um, when price gets stretched a long ways above these moving averages, you generally either have a correction or you have some sideways action to allow the moving averages to catch up. And then at the very tail end of the bull market, once sentiment is becoming extremely bullish, the general public is taking notice and they're starting to pile into the market, that's when you can get these big parabolic moves that stretch very far above the moving averages. And then, of course, they usually end up collapsing. But we should be many years uh, before that happens. So right now we're 20 weeks into this intermediate cycle. I think we're just starting an intermediate decline, and we're just starting the third daily cycle, which is probably going to left translate, not be able to make a higher high, roll over and correct. Maybe we come back down to test this breakout here, or at 1400, or even we could even test this breakout zone right in here at roughly 1440, which would be back to this consolidation zone. This would all be normal during the second phase of an ongoing secular bull market, or price could just kind of get stuck in a range for several months and give this moving average some time to catch up. But I don't think you want to be piling into the market, throwing caution to the wind right now, not 20 weeks into an intermediate cycle. The time to do that is when sentiment is excessively bearish and everybody's negative. That's when you want to be bullish, and that's when you want to pile into the market. Right now, I think you want to be cautious, either lock up profits or tighten stops up very tight, especially move this back to the daily chart. All right, if this was our daily cycle though, then you need to have a hard stop right below that. If if the cycle tops, like I think it will here within a few days, usually left translated cycles top in 8 to 10 days. We're on day 3. If price moves below this pivot right here at whatever this is, 1490, that's your signal that the cycle has left translated, and then at that point, gold would be moving down into its intermediate cycle low. So at least have very tight stops on right now, and if this gets broken in the days or weeks ahead, then that's your signal that an intermediate decline is in progress.